risk and return are related, right? I mean, you think about bonds and people would probably say less risky, less volatile, plays a different role. And for the most part, it does, right? It doesn't mean it's a riskless investment, right? Like you still had interest rate risk, you still had inflation risk, you still had things that could potentially impact the return of your bond portfolio. And that's what you got in 2022. That's part of the deal.
Seems like a lot of times when people are throwing dirt on the 60-40, it's because something has gone wrong in markets or they've had some sort of turbulent experience. Like you get back to the GFC or the global financial crisis, where because of all that stock market volatility, people were saying, well, the 60-40 has too much of its volatility coming from the equity side. Well, you should be equilibrating that, so have equal contributions to your volatility coming from each side. This gave rise to this whole new set of investments called risk parity, where you balance the risk between them. More recently, people said, well, the fixed income is not adequate to balance your risk, so you need these buffered ETFs. Didn't we do a whole show on buffered ETFs? I think that is a good sort of lesson for investors to keep in mind, is every time people say 60-40 is dead, the question is, what are you going to do about it? Well, if it means you're going to start investing in new products that might have more complexity, less transparency, higher fees, then it's not totally clear you've replaced something with a better alternative.